Hey guys, in this video I wanted to share with you the best and the worst trades of the week, plus some live trades from Friday, October the 5th, 2018, including, in my view, some of the most important aspects when trading in an intense live environment with options that expire the same day. I try to include some of the thought process that was going in as far as when deciding when to close some of the positions, when to keep, when to get back in, and so on. So stay tuned. I hope this video will be very useful to those that are either day trading or swing trading, stocks or options, or if you're just trying to learn more about how to trade, regardless of whether you've been doing this for 30 years or just starting out, this video should be helpful. So here's what we've got. We start with some of the worst trades earlier in the week. When the markets were still rocketing higher. We actually, before the markets opened on Monday, we were calculating that the markets were going to drop this weekend. I'm going to show you some of the messages that went out to our subscribers. However, there's such term known as a short squeeze, and you've been trading for a while, you should be familiar with it. If you're brand new, a short squeeze basically when there is a ton of people trying to profit from a stock drop, but the stock goes exactly the opposite way. It goes higher, and in this case, at some point, the short sellers have to cover their shares. The only way to get out of their position is to actually buy the shares, and that in itself creates a tremendous demand for the stock and propels the stock to go higher. Now, our two candidates for the short squeeze, and typically when a short squeeze happens, okay, it doesn't necessarily matter whether the markets are going up or down. In our view, NVIDIA was a great stock for a potential of a short squeeze. So I'm going to just point out, so we couple of alerts we sent out, and we're on Monday when the stock was trading about 287 range, 288. And so immediately after that, it shoots up to about 292. So these options are based on alert, they were making money. However, since then the position struggled. So we thought, okay, based off some of the indications that we typically observe in the charts, it still made sense to get into the trade the next morning, and sure did go higher. However, at that point, the momentum has changed. There's just not been enough. And so when we noticed the stock try to take that level of 290 on the way higher again, and it failed, and again, typically this type of combination, right, if you're a trader, in my view, the more times the stock actually tries to go higher without breaking that level higher, the likely the probability that it's going to fall. And we talk a lot about that in our chart course. So depending how you were acting on this alert, you could have locked a small gain. You had two opportunities to lock some small gains, maybe to the extent of 50% or so. We were actually suggesting buying 290 calls, 300 calls. 300 calls were going for 80 cents. You could have sold them for $1.50 at one point, pretty much doubled the money. But since then, when the stock started basically going sideways before the drop, you could have had a good opportunity to get out at break even, possibly losing 20-30% on your options. Okay, and so some of you that may not have been following the channel think, oh Jesus, 20-30%, that's a lot. Well guys, when we target returns of 400 to 500% on average, you are going to take some losses that are going to be 20%, 30%, sometimes even 50%. No matter how long you've been trading, or there's just not a 100% process that's gonna, there's no fairy tales. Okay, if you're trading in the live environment, there will be losses. Okay, and so I'm taking you for a couple of trades where the losses could have materialized, depending when you would have closed your position. Clearly, even in these examples I'm giving you, they were making money at some point. The question is, did you get out of the position at the time they were making money? Okay, so here's what made us bullish on NVIDIA, potential to short squeeze, and of course the whole action just kind of stalled out here. We typically like to look at different time frame charts, and so it had really nice setup right here on the way higher. Retraces back to the 50-day line, really strong volume on the way, and you can see that the strong volume is right here, right on the way higher, and just it actually broke out to an all-time high. And in our view, if the stock breaks out to an all-time high on very high volume, okay, it has a chance. So in other words, those short sellers that were maybe shorting the stock here when it was dropping here, right, in August, okay, maybe they've tolerated the losses till it got to about 280. Then there were happy. Maybe some of them were adding to the positions right here, right? And so the stock retraced back to the 50-day moving average, okay, and it bounced higher. Well, at this point, some of them are going to have to maybe diminish their positions. They're going to have to buy some of these shares back. So the case for this thing to actually go higher with a really nice setup like this here on the chart, in our view, this stock could have easily moved to about 308. And so those calls that we're buying, let's say the 300 calls at 0.8 or 80 cents, they would have, been worth $8. It would have been 1,000% return. So that's a trade that actually did not work. And moving on to the next trade that did not work is Tesla. In the last video posted on this channel, we've talked about Tesla, after the huge drop, when it dropped, from above the 300 level all the way to, 260, there was a lot of people that were building their short position. We were basically saying that, look, the stock from here has very limited downside because there's potentially a couple of nice positive developments that are going to take place for the stock short term. So we said short term, we're probably better off staying out of the position and trying to see what is going to take place. So the stock did trade the next day after I posted the video. Actually went higher by like almost $50, $42. And so we were expecting to move higher. Weren't necessarily expecting to move to 305. But at that point, when it did start hitting these levels, we did send the alert to buy some calls. And again, this trade was based on the fact that one of the most important pieces of information to me that I thought could actually propel the stock higher, and it did temporarily, was the delivery numbers. I expected the delivery numbers to be good, and they were good. Now, the main issue with Tesla, and you probably know I've probably posted 20 videos on this channel talking about Tesla and the numerous trades that we took on the short side, that were highly profitable, right? Some of them profitable to the extent of 2,000%. Some of the things is, since it is the most shorted stock out there, and specifically that day when it was dropping to 260, there was so many positions that were added on the short side. The case here for a short squeeze was the fact that if it was going to go any higher, the delivery numbers were good. If the demand part actually materialized, then we could have easily seen one of the biggest short squeezes ever, simply because of the amount of short positions that were added the week before when the stock was tanking. In my view, it had actually a really good opportunity to go all the way to 350, possibly even 360 from here. So the idea of these alerts, and they were sent out when Tesla was trading around 305 and around 306 the next day. As you can see in both instances, after the alerts, the stock did temporarily go higher. But again, same situation as with NVIDIA, right? You got a situation where the stock tries to go and break out to the new level once, tries to break out to the new level twice, tries to break out to the new level 3 times. At this point, look, you got to either cut your losses because they will be greater, and either reverse the position, which we all oftentimes do, or you just got to try to, as our process recommends, try to start taking some gains. In other words, don't sell your entire position all at once. For example, when the stock rocketed here to 317, those options that we were recommending the day before and that morning, they were actually producing a decent return, 50, 80%. And so you could have started taking some gains, not necessarily the entire position, right? And so what would have done for you if the stock continued moving higher, overall you would have had a significantly higher gain. Once you notice in this particular instance it started reversing, then you would have locked out the other half of the position or 1/3 of the position, depending on how much you were liquidating right here when you started realizing some gains. And so overall you would have not ended up having a losing trade. So 2 situations where we actually expected the short squeeze. The charts on Tesla were screaming that the short squeeze could come. The main thing that happened that did not deliver that short squeeze, in my view, was the story of demand. All the other 20 videos on this channel talk about mainly the main short theory for us has been, they talk a lot about the demand and how they cannot keep up with the demand, but in reality it's just a car. So there's a lot more companies that are coming out manufacturing similar products. So, the market is going to become more and more saturated. With the interest rates rising, of course, over 90% of these cars are being financed. They're not being paid for in cash. Naturally, when interest rates go up, it becomes more expensive for somebody. So maybe they were okay with paying, $700-800 on their Tesla payment. Well, now the payment could be, $900, $1,000. If the payment is $1,000, well, maybe some people are going to have to think whether they actually going to buy one or not. So just simple, basic facts, the laws of supply and demand, and of course, unemployment. You guys heard the job numbers on Friday. They were absolutely amazing, the lowest unemployment rate since 1969. So the probability of things getting much better from here are next to nothing. The probability of things getting worse from here are probably at 99%. Okay, so the market is priced for perfection. Tesla stock is priced for perfection. So the only reasoning behind trying to pull this situation on the coal side was the fact that if the deliveries were a problem was resolved, and they did resolve this, they could have verified that the demand was there indeed, then the stock could have had one of the major squeezes ever. Short squeezes, right? But the demand was the issue, and so the stock has sold off. Now, STZ is Constellation brand. We sent out the alert when it was trading about 218 right here. The stock shoots almost immediately higher to 225.76. Because of the high premium of the options, it just didn't end up being a good trade. And so we were actually recommending buying the 225 calls in expectation that the shares were going to move significantly higher to the 230, 235 level. That trade did not work. However, if you are paying close attention, maybe looking for some trades for next week, I do like this trade still very, very much. If you've been following the markets over the last couple of days, you guys would have seen how many stocks actually got sold off on pretty strong volumes. This stock actually maintained, and actually it did not drop when the whole market was crashing and dropping on Thursday and Friday. This stock did not drop at all. It actually held up really strongly. And on the chart, I don't have a copy of this chart here in the slides, but on the chart, if you actually take a look at it, the accumulation started picking up on Friday, and the stock was really being accumulated here around 222 to 224 range. So I think Monday, Tuesday, it will break out substantially higher, substantially meaning maybe it'll trade to 228, 230. And by the end of the week, it may trade at 235. So as a matter of fact, a lot of institutional investors that are reluctant to put a large amount of money towards some of the high speculative cannabis stocks, they are actually placing their money in Constellation brands, which for those of you that don't know what it is, these are the manufacturers of like Corona beer and some wines and stuff like that. The market has not been extremely hot for these products, but the fact that they invest in in CGC, and since they invested money, that stock has almost doubled in value. So this is probably one of the safest plays out there, when it comes to cannabis stocks. Yeah, it's not going to move like TLRY from $20 to 300 and then fall $200 in a day or two. But this is a solid company that's that institutional investors are putting their money in, and it is a cannabis play. So it's in my view, it's going higher. Too bad that just the trade did not work out the way it should have this week. So you would have necessarily taken a big hit here. Depending on when you closed your position, you would have been profitable as well. Okay, now that we got all the boring stuff out of the way, or all the bad trades, let's talk about some of the things that we were observing Monday. They took us to believe and actually caused us to take action in sending some of these alerts, so you guys would have taken advantage of some of these 1,000+ percentage that we did recommended this week. So here's what Monday started out with us sending out some alerts to continue buying CMG puts. As you can see, the time of the alert was at 7:50 in the morning, so you would have had plenty of time to prepare and take action as the stock was trading before the market opened. So Facebook, 160 puts, Amazon. But here's the main observation, right? Amazon and other key stocks are up on super thin volume. When stocks are up on super thin volume, they have a high probability of reversing. So that actually creates some of the best short opportunities. I point out specifically that everything besides Tesla has super low volume. So compared to Tesla, who was already pre-market, trading at a share volume of over 1 million shares on the upside, okay, which was one of the other reasons why we decided to take the call side and consider potential short squeeze, right? But besides the huge volume on Tesla, all the other stocks, all your FANG stocks like Amazon and Netflix and so on, they were going higher in very, very low volume, which is a recipe for disaster. And so here's what we said: unless volume picks up at the open, this move higher may reverse quickly by 10:15 a.m. or tomorrow, which at the time this was sent out at 8 a.m. on Monday. Tomorrow would have meant at that point on Tuesday, and as you can see, the markets did start reversing. One very dominant trade for the markets, and in our 13 markets move formula, we describe it as a move 6, when the market actually sells towards the end of the day, or between 2 and 4, especially within the last hour of trading. We've noticed a lot of these type move 6 that have been taking place over the last week. Oftentimes they're combined with move 11. So that actually, if you're a VIP subscriber, you would have actually received a call from us saying that, look, we're expecting a big market drop Thursday at some point. And so that's actually exactly what happened. But we were planning on it on Monday, as you can see, at 9:24 a.m. right before the markets open. We were suggesting our subscribers to buy Amazon 2020, 2010 puts when it hits 2030 level. Also, there was a suggestion, if the shares of Amazon were to continue moving higher, to add more to the position if it reaches 2045, 2050. So let's take a look to see exactly what happened. Actually, I'm going to have to go into detail what else made us take a look at that trade. But here's the result, right? So Amazon shares drop $160 after we send out the alert. Over 1,000% return in 5 days. And this was Monday when the alert was sent out, right? The stock actually does trade to 226. It hits a high of 2,033.19 cents. After that, trend sideways for a little bit. So you had plenty of time to actually get into that trade, and after that, it just continuously sells off for the rest of the week, hitting a low all the way at 1862. Okay, so what actually made us take a look at this trade? So if you haven't taken our chart course, guys, this is just too simple. You can catch these trades on your own if you know what to look for. And it's in the process. We look for the charts on different time frames to identify the divergences. There are 6 cases of divergences that we typically consider. You can find them on a basic chart. A lot of times, you can see my examples. All these charts, their photographs are being taken on stockcharts.com. So this is what you're looking at, and they're free. You don't even have to have, if you're just trying to study this and understand this, you don't even have to have a brokerage account. You can just go to stockcharts.com. Boom, plug these sticker symbols, and you'll be able to see the same thing that I'm showing you right now. Okay, so Amazon, and you can adjust the time frame right here. So typically the easiest ones is daily or weekly. You can click this thing and adjust that. Okay, but here's what we've seen that made us send that alert. In our view, Amazon was clearly hitting a double top. Double top is a very bearish, formation, which we utilize frequently to enter into a short position. Now I'm going to point out a couple of these divergences here. Okay, so Amazon recently traded at 2,050. This time it tried to get close. And we're talking about double top. It doesn't necessarily have to match the exact price, but it's going to be within, it's going to be pretty close. It's going to be within maybe 10, 20 bucks when it's trying to hit a double top, which was in this case 2,033, as I've just shown you in the other chart. So notice this, the RSI here was getting close to 90. It was in the high 80s. The RSI, the second time around the stock tried to get here, was significantly lower. It was like in the 60s, actually in the 50s, high 50s. So huge drop in the RSI. One thing I can tell you from trading for 30 years is the stock is not going to break out to an all-time high with a huge drop in RSI. What it really tells you, yeah, there's some people that are still interested in buying the stock. However, it's probably not going to gather enough momentum to make that move higher, at least not right there at that point. Okay, so here's your divergence. The stock price goes higher, the RSI drops significantly. Also notice right here, I highlighted, look at the volume. As the stock price goes higher, the volume actually doesn't do anything. So if it had any remote chance of moving higher from here, and reaching all new all-time highs, what would have had to take place is the volume generally would have to pick up as well and move higher. But what you clearly see in here is none of that is taking place. The volume is flat. So the volume is flat while the stock is trying to take action and move towards that all-time high and hopefully surpass it, but it just doesn't have enough volume to do it. Of course, on the downside after that, look how the volume increases, which clearly is a very bearish thing. But at that point, we couldn't see this part of the chart, right, when we send out the alert on Monday. There were some other bearish things, and this is something to point out because Amazon, of course, has been everybody's favorite. Some of the things that institutional investors are not going to tell you is when they're actually going to go short and when they're going to distribute their position. So in order to do that, we use accumulation distribution, and a lot of times, we're able to pinpoint some of the pivotal points on the chart when the financial institutions, the big banks, actually move the stocks, are coming in and they're starting to distribute these shares opposed to accumulating them. So clearly it set the first lower high after this high reached in July, and so that was actually one of the first signs to get out. And then just now it set another lower high in relation to this one. So there was more people interested in actually liquidating shares at these prices than the amount of institutional investors willing to buy them. Also, it was predicted by this bearish crossover on the MACD. So that's not to mention that last week the most bearish sector among all the stocks has been the retail sector. If you are a day trader, you probably noticed how crazily a lot of retail stocks were selling off. And so who's the biggest retailer? Well, Amazon. So our decision to send out the alert was based on the charts, but there was clearly a lot of other reasons to short this beauty besides the charts as well. Again, the result is the stock dropped 160 bucks since our alert was sent. Now, again, from the psychology of short selling, typically a lot of traders that I talk to, they're actually afraid to do this, right? Because just pretend like this part of the chart is not here yet. So when you're looking at this, it looks like the stock is just about to go to the moon, right? But this actually presents some of the best opportunities to short it. And as was described in the alert that we sent, one of the things that we were observing was the stocks, all the FANG stocks were moving higher pre-market on extremely low volume in comparison to their typical pre-market volume, and that was the giveaway when was the most appropriate moment to get into this position. Okay, so 1,000+% return on Amazon on this puts. 2010s were sold for $13 in at the time on Monday, and then you could have sold them for as much as 140, 150 bucks by Friday. Okay, so some of the alerts, CMG. Okay, Facebook, 160 puts. As you can see on Monday, the alert on Facebook was sent out at 7:50 a.m. So again, you would have had plenty of time before the market opened to get ready to take that trade. What happens to Facebook after the alert and what is the result? Facebook's drops $9. It doesn't sound like a lot, right? So if you've been trading stocks, $9 drop means nothing, especially in the $160 stock. But in the world of options, it actually produces returns to the extent of 300 to 400%, depending exactly when you were getting in and out of this trade. So again, the alert was sent here before the market opened. The stock actually hit 165 when it opened, so this would have been a perfect entry. Within days, of course, the stock hits a low of 156.20. All right, next trade, CMG puts. Now this one's been a tough trade, guys. And we've been advocates for this CMG puts for a while now. Now, the timing of this alert, we actually sent a ton of alerts on CMG Friday before the market opened. So at the time, it was trading at a much higher level. But so this one's, depending when you were getting into this trade, it dropped 18 bucks since the alert was sent that went out on Monday morning pre-market rate. And then you would have locked in 200 to 400% gains depending on when it executed and exited your trade. As you can see, I have a note here. This was actually the toughest trade of the week because based off the charts, everything was just absolutely awesome. The stock was just in a complete downward spiral. It actually did not even have a support level. As you can see, after the alert, right, it drops 28 bucks. It doesn't have a support level at 431. It actually had a support level previously established in around 420, 425 level. So it actually didn't quite get there. If it did drop just a few moments lower, a lot more of our subscribers would have locked in much more substantial gains. Now, some crazy analyst decides to raise the target price and calls it a buy and all that good stuff. So the reason I say it was such a tough trade, because only a handful of stocks advanced this week because the markets were clearly dropping Thursday, Friday intensively. And so this is actually one of the stocks that, while the market was dropping, was able to maintain a pretty solid level of strength and actually advance higher, which of course it didn't necessarily move higher because that's where it started the week. And so it didn't even get back to that level. So as far as the week concerned, it still ended up finishing lower. But depending on when you were buying the options and when you were getting out, this could have ended up kind of being a tough trade. Okay, so we were recommending buying 450 puts, 440 puts. I know some folks got actually into 430 puts. And, you know, depending when you were, even on the 430 puts, you could have still made maybe 50 to 100% depending on when you were buying them. But, you know, clearly if you didn't get out on time, you would have probably just been sitting here wondering, well, why the hell is this thing not dropping? The whole market is stinking. So that one analyst just kind of screwed this trade for a lot of people. Okay, but depending again, when you were getting 200 to 400%, would have been just an easy trade. If you were getting on it on Monday. FFIV 190 puts at 1.6 went out. That alert went out, as you can see, at 9:56 a.m. When the stock was trading at 193. And here's what happened. FFIV 600-700% gains depending on when you executed the and got out of the trade. The alert was right here at the 193 level. The stock continued dropping throughout the week, hitting the low 181. So you would have been buying these 190 puts for 1.6. At one point, they were worth a little over $10 when the stock was hitting this low point right here. Okay, next trade, STMP, actually AYI. Okay, we were recommending buying October 19th puts, 145 strike puts at 3.1. At the time, the stock was trading at 157. We had a target price on this thing to 135. So the alert, as you can see, was sent out at 2:57 p.m. on a Tuesday afternoon. Here's the result of the AYI alert. The stock dropped $29 after the alert was sent out. 500+% gains, depending on when you were getting in and out of the trade. So here's the time of the alert. Again, as you can see right here. Okay, so this was a Wednesday. About 157 when the stock was trading. So within 2 days, it falls to a low of 128.95. You would have been buying these 145 strike puts at 3.1. You would have been selling them as much as $16, which is over 500%. Okay, next trade, STMP, 210 puts at 1.6. The alert was sent just before the market closed on Monday. What happens to STMP over the next couple of days? We'll show you that in just a second. So $13 drop after the alert was sent. 300% gains depending on when you executed and exited your trade. So here's where the alert was sent out. Here's a low of 207, which makes it for a $13 drop in the stock shortly after our alert. Okay, what else we got here? Okay, good. So let's talk about losses for a second. Okay, losses will happen from time to time. It's just a part of conducting any business. So treat your trading as a business and it will start generating you money. If you keep treating it as a hobby, it will cost you money. Okay, and so I wanted to give you an analogy of playing golf, right? So if you were to just show up to a golf course without knowing how to properly take a swing, without maybe a trainer that showed you initially process behind on how to position yourself, how to swing your hips, all the specifics that go into a professional golf player type swing. If nobody walked you through the process, then you would have just showed up to a golf course thinking, well, let me just hit some balls. And so, on some occasions you might have hit the ball and some you might have missed it. You would have completely missed the target. Think of trading the same way. It doesn't have to be golf. Maybe you play basketball or football or whatever. What do most of the professionals do in sports that actually make a ton of money? I'll tell you one thing that they do that most of the amateurs don't do, and they train every day. Okay, they train hard. Okay, there's no excuses. And so what do they train? They train on the process. right? They train on certain things that are important in that sport. Well, what's important in the sport of trading options, trading stocks, is to have a solid bulletproof process that does not depend on, whatever they're talking on CNBC today. Some process that does not depend on the news that everybody talks about. Because if you think about it, how do you make money in buying stocks, shorting stocks, or anything? Well, you have to identify the drop or the rise in the shares before the drop actually takes place, or before the significant rise takes place. Well, oftentimes, by the time somebody's talking about it in the news, that move has already materialized. It has taken place already. So it's too late a lot of times to get into the trade. So to avoid being in situations like that, over the last 13 years, we basically came up with a process that is not based on the news, that's based on the charts. And again, I will say this, even if you are the best golfer, are there times where you're going to show up on the golf course, some things are just not going to work out? That does not make you less of a professional, but sometimes your swing is just, not going to go quite as smoothly. NFL ball players, do they show up and do they win every game? No. So trading stocks and options is no different. There are days, guys, where you will lose money. There's no way around it. But as long as you have a process and you stick to the process, the idea of this video is this, right? I've shown you some bad trades. I've shown you good trades. So they all took place over the course of this week. The only common thing they have is we use the same process. We look at the charts in different multiple time frames. We try to identify a potential catalyst, and that's when we show up and we strike. Is that going to make every trade profitable each and every time? The answer is no. But if we stick to our process, we will get more trades right rather than wrong. And the only thing then what we have to do is stick to our process, practice it, and in this case, what do we practice? Well, you have to understand the process first, okay, which we clearly show you our process in our charts course, where we talk about the 6 cases of divergences. We talk about the 3 master patterns for shorting stocks, which I think is incredibly valuable skill right now, considering the markets are at the all-time high. You want to get those skills and know how to apply them to the current market conditions to profit over the next few years. If you understand the process, you apply it every day. You would have to apply it to a minimum of at least 30 charts a day. Okay, so but if you don't have a process, then looking at 30 charts a day is going to be pretty crazy. I mean, it may take you hours to do it. If you know the process, you can probably look at 30 charts in 30 minutes and identify some of the better trading opportunities, and you stick to your process. So number one thing, if you want to be a pro as a trader, you have to have a solid process that is not just based on some news. It needs to have something more substantial to it. And number two, just like all the pro ball players, you have to show up every day and you have to practice it. And even when you do all that, it does not guarantee that every trade you will take is going to make money. You have to understand, if you do this for a living, or you aspire to do this for a living, there's some days, just like with any business. I'm not sure if you're watching this video, whatever your current occupation is, right? If you own a business, think about these times where you've made some investments in the business and they did not work out, and they did not produce as great of a result, but you had certain calculations that those investments were going to turn profitable for you. Think about the first few years that maybe when you opened your business that you had to continuously invest money in it before ultimately a few years later it started generating much more substantial revenue and you were finally becoming profitable. So with trading, it's no different, right? You have to show up every day. You have to make certain decisions. You have to invest. It does not guarantee that every decision and every trade you're going to make is going to guarantee you success. But the most important thing is this: if you're watching this video and you don't have a process, you need to establish one ASAP. Our process, again, is based 90% on the charts, not the news. And so if you want to learn more about it, just click some of the links in the description below this video and take action now. Don't trade another day without having a solid process and without fully understanding it. Okay, guys, with this being said, okay, as promised, enjoy some of the live trades that were recorded on October 5th. Now, they actually, I think the most important aspect of these trades is they go into some of the psychological aspects of the thought process, some reasoning behind getting in and out of some of the positions in a real live trading environment. Now, the goal of that recording was to actually turn $1,000 into 10K in one trading day. We ran out of time. We were only able to take that 1,000. Actually, we didn't utilize the whole 1,000. We used like 600 bucks of it. So we were able to turn that to 3-4K a couple of times during the day, but we did not actually exceed the 10,000 mark for the day. So with that being said, I will try to find some time, maybe next Friday or the following couple of Fridays, and we're going to try to make that happen for you, basically turn a small amount of money into a more substantial amount of money. For those of you that are not interested in watching how to turn, $600,000 into, $4,000 or whatnot, it's not that big of a deal, right? I do have a course where I share all the specifics and details on how I actually turn 12K to 466K in less than 7 hours. So all the specifics are there, all the trades are listed. As a matter of fact, if you have not taken advantage of our offer for a 20-minute coaching trading session, when you do that and you go register for it, it will send you a PDF of all the trades that were taken that day when I turned 12K to 466K. Okay, and for those of you that are interested in signing up for the alerts, there's different levels of the alerts that we offer, and it is an absolute requirement for you to take the charts and patterns recognition course in order to increase your success in the execution of these trades. So if you're interested in subscribing for those, the links are below this video. Trading day, so here it is. The first trade we're going to take is TLRY. Boom. Let's try to pull up the option chain right here, TLRY. We're looking at, actually, as you can see, these options do expire today on Friday, October 5th. We're looking at possibly 140 strike. Let's see what exactly 140 strike looks like. 140 strike right now is 170 to $2, so we can actually buy in the money. Let's say this 6.9, 540. We can buy one of those, or we can buy, let's say, we can go something crazy and buy, let's say, 5 of these 136s. Price is going to be 1. I'm buying 6 of this. Alright, puts, boom, let's go. Hopefully we'll get a fill. Yes, done, in. Alright, so we own 136s at $1 right here. And what we're going to do is we're going to set a limit sell order to close this out. Actually, I think it's going to fall to maybe 125 today. So what I'm looking at doing is, looks like we can buy one more, right? So let's try to buy one more. Buy one more. See if we can get this one for 0.8, 0.85. Boom, done. Alright, so create closing order, 7 TLRYs. We're going to sell them at actually 6.9. And that's going to give us a credit for about 4,900 bucks, 4,800. And then we're going to use that money, so we're going to get a credit for 4,830. And then we'll use that money to turn that into over 10 grand. As long as this order gets filled, hopefully not within the last hour of the day, right? Not within the last trading hour. We'll be good because we'll be able to utilize this 4,800, turn it over 10 grand. Pretty easy stuff, okay? So we just need this trade to materialize in the next couple hours here. All we're looking for is about 600–700% return. I'll catch you guys in a few minutes to follow up on the trade. All right, and so here's that sell order. Now is sitting and waiting there. Okay, guys, we're back. Fast forward about 3 hours, 50 minutes after we took the trade. The trade is kind of entering sort of a little bit of a danger zone here. Here's what I mean by that. We have the strike, 136 strikes. We got 7 puts, right? We want to make sure we're almost in the money. However, what we don't want to do, we don't want this stock to create sort of a double bottom right here at 137.2. So we need to make sure that the stock actually breaks much lower. And what I'm watching specifically is the volume, right? So ideally, we want to see a volume spike on the way down. And so ideally, if the volume spikes, then we could see a $7 to $10 drop right here. And then I've actually split the limit orders. Initially, I set all 7 to sell at 6.9, depending how quickly this move could accelerate. I actually split the order in two parts now. I have some to sell at 6.9, still 3 of them, and I have 4 set at a much higher price. So we'll give you another update here, but that's specifically what I'm watching right now as far as this trade. So we need to make sure it goes below the 137.2. In other words, we don't want it to come close. We don't want the volume to start going lower as it's trying to get to that 137.2 place again. We're going to make sure that the volume intensifies on the way lower, and then we know that this trade will be successful. So catch you guys in a few more minutes. Okay, so 10 minutes later, it does hit a LOD or low of the day of 137. However, we're not completely out of the woods yet. Okay, it just hit 136, so we're being very close to the money at this point. Okay, so 136.41 is the low of the day now. Currently trading 136.54. As you can see, the size of the account now is at 1,900, so we pretty much doubled the account so far in the last 4 hours. And I might have forgot to mention it earlier, but as you saw, the initial balance was like 1,000, and we weren't utilizing all of it, maybe about 60% of it. So there's reason for that too as well. But here's the situation, right? It's just very hesitant. I don't like that. I don't think we're completely out of the woods yet. Ideally, we want to see this volume. It did spike a little bit, but we want to see more volume like this, or volume like this here, to make sure that this trade goes. The first limit order to close position partially will be executed if the stock falls to about 131. Now, it could be executed a little bit earlier. If it does that, in other words, if the momentum of the fall, the speed of fall, the velocity of the fall is going to go significantly higher, then there's going to be additional premium for the options. So ideally, especially when you're trading here in the last day, right, these options actually expire in the next 2 hours and 44 minutes. So we want to make sure that when it does continue falling, it's doing that on a greater speed, because that's going to allow us to cash in on the position much faster. Okay, so another low of the day at 136.19. The account is 2,000 right now. So we'll do a quick follow-up in a few minutes. Okay, guys, fast forward 10 more minutes. The account is at $2,521. I am concerned, however, about the trade. Yes, we are in the money. Here's what concerns me. I would like to see some more volume, and unfortunately, this volume is not coming in. And for this big move, like $10 drop from here to come lower, I really need to see some strong volume. And right now, the volume is coming in at increments of 2,000-3,000 shares, and 20, 50,000. We need a substantial amount, like at least a few 100,000 to come in one block to move that thing $3-4 lower. And if that takes place, then I think some more sellers are going to come in, and so we need this selling to intensify. And right now, the way this selling is going, it's going through a very small amount of volume, and I don't like it. However, we still got 2 hours and 32 minutes till the close. But the main issue with this rate, we're trying to get the account to above 10 grand, and so I need this move to come here in the next hour or 2 hours so that I can use the funds to take the account above 10 grand by the end of the close day. Okay, so this is where we are right now, guys. The stock is making a low of the day at 134. The account is at 27.66. We'll catch you in a few minutes here. Okay, so unfortunately, my concern about the volume did materialize, and the stock rallied from 134 to 137. It's exactly what we don't want to see going into the close here in the next couple of hours. So unfortunately, may have to make the decision to just cut the trade right here and try to find some other trades for the rest of the day, because without volume on the downside, may have a very hard time falling. Does not mean it's not going to fall, but at this point it had a really good opportunity to fall here and it failed to do so. And the main problem is the volume actually started coming in on the buy side. That is definitely not something we want to see. So I'm going to have to cut these trades. So 2 orders. I'll just have to cancel both of them and put another order. I'm going to do it on my phone because it's a little bit quicker. As much as I don't want to do it. Still waiting a couple of minutes. It's going to make a possible move lower by about 50 cents. And get a better feel. The spread is about 50 cents right now. So these are the contracts I got, right? 136 strike. Bid 150, ask 2. If it drops 50 cents, I can definitely fill it at 2 instead of, maybe 170 or 175. So I'm going to wait just a couple of more minutes. Okay, as you can see, I placed the order right here, but at this point, instead of moving 50 cents low, it actually went up 50 cents. So at this point, this trade is going very horribly. Nobody wants to buy at $1.50 because everybody clearly is blinded now. The market is making a pullback, which you can see right here. So all the gains are erased. All the gains that we were so carefully guarding for the last few hours. Actually, somebody bought them at $1.50. Okay, so here's what we got. Basically got $1,000 we're going to utilize for the next trade. All right, so what I'm going to do is I'm actually going to buy about 20. Actually, I'm going to buy 30 at 0.05 of these STZ calls. I'm actually buying calls. So here it is. I bought these position right here, 225 calls. Right now the stock trades at 223.30. Okay, so actually the calls just went up to 10 cents. So we're picking up a little bit of money, $75, right after we got into the trade. Not really spending a ton of money on this because this is a very low probability trade. However, if it does pay off, we can have 1,000% return here. And I'm actually going to place an order to get out of this trade. I'll place an order to close these at 50 cents. So we got 30 of them. I'm actually doing it on my phone, guys, but it's just a lot quicker to do it that way. So STZ, got 30 of them. I'm going to sell them at 50 cents. Close position. Actually, I'm going to put them at 65 cents. So that'll be $2,000 right there, 1920. Okay, there we are. All right, and now we're going to search for another trade. Hey, sorry guys, I actually didn't have time to record the actual trade, but I bought 7 of these contracts for Amazon calls, 1890 calls, and so I was actually buying them at about $1.10, $1.20, and the stock temporary went a couple of dollars higher, but now it's dropping. So we'll see. I think the market bounce is coming, and we could see easily. I'm not saying the market's going to raise all the red for the day, but it definitely have a chance to maybe run up quite a bit higher from here, and I could see Amazon maybe hitting 1890, 1895 before it falls again. Okay, so temporarily the markets are turning around. What's noteworthy is the time of the day when they actually making a move higher, which is very important. Right now it's exactly 2 p.m. on a Friday afternoon, October the 5th. Okay, typically if the move was to accelerate on the downside, a lot of banks would have to put the collateral, because the market's been dropping now for a couple of days, and so they would have to made some margin calls, and a lot of them would probably have to sell, some shares, which would intensify the selling. So the fact, and so typically that would happen by about 2:15 if they get margin calls, and if they would have had to sell a bunch more shares, that would have taken the market lower. However, we're seeing exactly the opposite of that right now. So the stocks are actually moving higher, and now it doesn't mean that they're going to end up higher for the day. It's just a temporary bounce, right? And so we're trying to capitalize on that move higher for now. And a lot of times you will see these market bounces in the last 30 minutes. However, it would be nice if the market bounced higher now, which is 2 p.m., and then if it would have actually had quite a bit of a sell-off in the last 30 minutes. So that way we can actually increase the trading account. So by playing both sides of the equation, of course, that is. So this is where we are. Our Amazon position, the call side, 1890 calls, is starting to make some money. The volume observation on TLRY, as you can see, we were getting out of the position. Unfortunately, not here. We're still waiting for the position to potentially go our way. Again, the concern was there was just not enough volume on the sell side. And so when I was highly concerned about that, when the stock made a move here, I decided to get out. I do believe by the end of next week it's going to drop substantially from where it's at today. Okay guys, hour 30 minutes before the close on Friday, October 5th, the account is at $3,500, mainly because the 7 calls on Amazon, it's making a bounce. This highly speculative trade on 225 calls on STZ, it may materialize. However, ideally we needed to break above 225, which currently has a very low probability. But if the volume accelerates on the way higher, I wouldn't be surprised if the stock ended up at maybe 226. In that case, our options are going to be worth $1. We're paying only 5 cents for those. So that would be pretty crazy return percentage-wise. Okay, I'm getting ready to close this position on Amazon because on a bounce like this, when the market is overall down quite a bit, you don't want to overstay your welcome on the bounce. So I do have, as you can see, a limit order. I always do that. It's sitting there, but I'm not sure. I'm looking at this situation here. I'm interested in taking and locking in some of these gains and then observe what takes place. So right now they were worth, all right, cool. So they should be closing pretty soon here. I got an order sitting at 4.9. We're buying them for $1.10, $1.20. So it's roughly a 450% gain. We need the stock to just move like $1. Okay, if Amazon moves $1, this 7 calls should be executed. There it is. Boom, you heard it. There it is. 7 at 4.9. Live execution. Okay, so now the account is at $4,000. Okay, so I don't think Amazon is actually going to be able to close this gap. I think ultimately it will close below the current level. So I'm going to go ahead and initiate the trade. Ideally, maybe this one right here, 1887 puts. Okay, so buy 10 of them at 3.4. Let's see if we can get a feel on this. We may not be able to. Okay, so we got 10 Amazon puts. I know it sounds crazy, right? Dude, what are you doing, man? Look at this chart. It just goes to the moon right now, right? So I like scenarios like this. So at this point, I am calculating for it to possibly drop back to 1880, maybe even 1870. If I'm correct in my estimation, then this puts could be worth as much as $10. We got 10 of them, so that should put us at 10 grand. And clearly, if I close that trade, I'm going to have to take some other trades. So in the meantime, what we're going to do is I'm going to set an order to sell these because I think the market is going to turn around. We got hour and 24 minutes to go. the puts we just bought on the Amazon will maintain some kind of value if it drops $5 lower from here. So there we are. We're gonna try to set a sell order. I'm actually doing it on my phone, guys, as I'm speaking. So I'm gonna do the sell order right now. Amazon 10. I'm gonna try to sell them at 10 bucks. Okay, in order for us to sell them at 10 bucks, the stock probably need to drop to about 18.80. So I'm calculating like a $12 move lower from here. Okay, I'll put an order at 9.9. Done. And that'll put us at 9,800 bucks. Boom, handle. Okay, so as you can see, I set that limit order right here. And at this point, we're no longer bullish on this move. Now we are bearish, and we're going to try to lock in a gain of about 6 grand if it drops from here to the level of about 1880. Okay, 28 minutes before the close, the account went from 4 grand to 2,800. It did drop to as low as 1,300 in the process. Here's the situation. I didn't nail the timing for the top perfectly, and so after I got in the position, the trade actually went completely against me, and now it's fixing to get finally to the being in the money price, which was 1887 puts is what I bought. But the problem is, well, I got 27 minutes left right now, so we're not looking for as substantial gains as could have taken place if the trade was doing this earlier. Now, what happened in the meantime, it created a triple top here intraday. Let me see if I can pull this up so you guys can see this. All right, so here's top 1, 2, 3. Okay, and when it was trying to make the second top, if you scroll down, you're going to see that the volume was actually diminishing. So as the stock was trying to go higher, the volume was going lower, which was a case of a divergence. So typically, I wait for like a double top formation. The more times the stock tries to go higher, the more likely it is to fail on the move higher. So after a triple top, it's actually a little bit safer to short. So that's actually when one of our alerts went out, when the stock tried to hit this level of 1900 the third time. We send out an alert to our subscribers to actually buy these 1895 puts. At the time they were $2.30. So we'll see how far that trade will carry. Okay, so we're almost in the money now. Those 1895 puts are worth now, let's check on them. So the 1895 are now worth $8, and so the alert went out to buy them at 2.3 about 20 minutes ago. All right, so the account is back to 38.26.